Good evening. I just wanted to review the ES action today from an educational perspective. Yesterday we had talked about a trade setup that we had where the market crossed from what we call market direction red, and the visual way to cue that is the box here on our screen, this red direction box, changing to market direction green, and we caught a long on the ES. Just to show you how important the technicals are that make this tool work. Yesterday we crossed from red to green using the midpoint of the day. Basically, there's three lines that you're going to see form here on the charts. We're going to watch those three lines. One's the opening level, one's the midpoint, one's the short-term moving average. When you go from being beneath at least two or three of those lines to being above at least two of those lines, that's a shift in market direction. And today we played out a little differently, so I thought this would be an interesting educational opportunity. Here's a look at the first 4 bars of the day on the ES. So this was yesterday's close. We closed right here at the dashed line, and then here's the next few bars. Now, watch how we play out over the course of the day as we head lower early on. Okay, and you can see how that plays out. Now, what have we got? We've got the opening level is this red line. We've got the midpoint is this red line. We've got the short-term moving average is the last red line, and there's also a VWAP in there. That's the volume-weighted average price of the futures contract. This is the ES, the S&P 500 E-minis. Now, as the day moves forward, watch how these levels are used. So you've got now a VWAP is the purple line. That's a point that the market often gets drawn to over lunch, and this is the red midpoint. Now remember, from a market directional perspective, if we go above this red line, we are now above both the short term and the midpoint. That gives us market direction green. That would be a long suggestion for the market. Let's watch and see how the market plays out over the course of the midday session. Rallies up to the VWAP, which is very common in the middle of the day. Fails just under the midpoint. Now we actually go and we make new lows here over lunch, and this is just entering lunch really, which brings the midpoint down a little lower because we've now made new lows for the day. And the short-term moving average also down, the VWAP down. Here's newer lows right in the middle of lunch, actually a big volume bar in the middle of the day like that. And actually, for those who follow our Comer tool, you now have a 9-bar setup. That's the 9 green count here. It's a 9-bar setup towards our Comer and Seeker count in the market here. Now, where do we go from here? Well, as we continue to have the day play out, a little rally before lunch is over. That's not uncommon. Okay, then we go flat. Now here's about the time where people start to come back from lunch. Okay, it's right here. So the question becomes, are you going to maintain market direction red, or are you going to somehow reverse magically? And remember, from our perspective, you need to get above the midpoint before I would consider the market reversed. That's the most important point of the day right here, is this midpoint line, which is just above the VWAP. And so here we go. We actually, in the last hour or two, push lower. Okay, one more time. But what's interesting is we get a rally late in the day, in the last hour, driven by Apple's earnings coming out after the bell, with some rumors about obviously Apple potentially beating again, which they did not today. And here's the push up that we get in the market from that Apple. And look what happens here. We get up through the VWAP, and we hit the midpoint to the tick, and we roll over. So market direction never goes green on the session. It came up and hit it exactly and did not get through. That's how important that midpoint is. That's a number most people don't really follow. I think it's really critical that you do. Now I'm going to show you, I'm going to flip the chart here for 1 second. Okay, so let's take a look at this view of the market. This is the ES again, and this is midday, but I've got a couple of different tools here. I've got the Seeker tool, which also uses the 9-bar setup phase. Remember midday I talked about that 9-bar setup phase to the downside, and it gives us either a Seeker or a Comer buy signal. The Comer never reached what we call a 13 buy signal. And by the way, a Seeker buy signal looks like this. It's a red 13 with an arrow above it. This one is not interesting to me for one reason. The 9-bar setup from that count, which is prior to the 13, that's where these setups come from. That's why it's called the setup phase. Split over yesterday's action and today's action. I don't usually like to see that. I like to see it all within the day. But here we are inside the day on the 5-minute chart. We've got the 9-bar setup phase. And so now we're going to start to get a Seeker count, which means a 1 through 13 red count under the parameters of the Seeker tool. And if we get to a 13, what we're going to get is not only a buy signal, but a risk line, and it would be a break and close under that risk line that would cause the signal to fail. Now here we are, here's the 12, okay, and again we're just coming back from lunch, okay, and what happens is there's your 13, okay, so you can see this little pink line that forms right under it. That's the risk line. Basically what that is this is a 13 buy signal for the market, and what they're saying is if we do head lower, if you go long somewhere in here on the buy signal, if we do head lower, what you're going to want to do is keep your stop on a close under this line, and this line is going to continue to track. As you can see, it moves across. Now here we are already heading down. We hit the line. We still don't close below the line. Still don't close below the line. We get a bounce. This is the Apple run that I talked about on the other chart. Okay, so here we are running with Apple, and this was the point where we then went back up to, if you remember the other chart, this was the midpoint of the session right here. So the 13 buy signal gives you a correct signal that you can use in using the risk line of that, which is kind of your stop out point on a close under that. Never would have stopped out. So it was an interesting setup today, again, technically speaking. Market direction red all day. Should have been looking primarily for shorts in the market. We were 6 for 6 in our stock trades that triggered with market support, and never got to green. We used the midpoint as resistance late in the day, which would have been what you needed to get market direction green, and then also this 13 buy signal on the Seeker.